Hi, everyone. Welcome to Face. Hello, Brock. Everyone doing okay? Good morning, Ingmar. Shahab. Okay, so I'm showing S&Ps right here. And, this could have been a stop hunt up here. Blake talked about it yesterday. You go back to the daily and the rally that we had took out the April highs. Hi, Didier, Brandon. So this could be a failing rally here. Wrong over the highs. The only thing that bothers me is RSI readings at this level was above 70, and we only had a 1 or a 2. So possible there could be a 3, but you have to protect yourself somewhere. So if you try it in here, you have to be wrong over the highs. Otherwise, you go, well, I'll watch it a while. Who's ever done that? I think I'll watch it damage my financial situation is what happens if you say if you hear yourself saying that. I think I'll watch it for a while. Okay, so don't do that. Silver's making another new high, but for the first time on a lot of different time frames, the RSI did not go above 70, playing with the 1738, 78.6 level here. So it is stronger than gold again, as shown by the gold-silver ratio. And while silver's making new highs, and this has happened for a little while, gold isn't. Okay, so could gold make a new high? This too, just like the S&Ps, bothers me, this RSI reading here a little bit. Welcome to Face, Ann. Well, you start getting the action back under 1740, you want to try a top pick in gold, same thing. You probe it in here and you have to, risk the highs. So from here you have about a $14, $15 risk on it. This is about 61.8 back of this big decline. This looked to be pretty impulsive. And look, it took a few candles to get here. Look how many candles it's taken to retrace. Doesn't mean that it can't keep grinding up and making a new high, but we're going to see if this was real. There still are higher objectives that, people I respect like Andre have. I showed his, well, here, I'll show it again because I'm a subscriber to ForexAnalytix. Good to be a subscriber. Whoops. Sorry, guys. Look at all this great work. Anything you're in, look at all the instruments that are covered here. So I showed Andre's stuff the other day in gold. It's a Dixie, here's the gold. Okay, so, I mean, it's all green. That means, these color codings, green is bullish. This is neutral. So here's Andre's stuff. Different objectives if we blow through this. And his lowest one was the bearish butterfly at 1771. So that's possible. He has objectives all the way up to 1860, different harmonic patterns. There's always options. I don't care if it's Elliott, if there's harmonics, or you're a conventional classic technician. There's always more than one scenario. You have to be open to all of them. But, I was thinking about this in the gold, and right or wrong, I did sell this pop, is that, this bothered me. But let me ask you guys this. If you wait for everything to be perfect and line up, you may as well shut down your platform. There's no such thing as a perfect trade. There are higher and lower probabilities, but you can end up with analysis paralysis I'm not saying you have to trade a lot. I'm just saying that sometimes even the perfect trades that you have all the readings you're looking for don't work out. So, you know, you just have to probe and protect, probe and protect. So you probe it and you protect it. You probe it and you protect it, okay? Because it is a one mistake business if you say, I'm going to watch it a while. So write that down. Oh, thank you, Steve. Anyway, nothing bothers me anymore. I just want to say one thing. I was watching Rocky, the original one, okay? And what else are you going to do during a pandemic but watch movies you've seen 100 times? But I noticed something that I hadn't noticed before, that after Rocky got the big fight and he got up the first day to begin to train, he got up the same time I get up every day, 4 a.m. Okay, 4 a.m. Blake gets up even earlier, but Blake, we have something in common with Rocky Balboa. And you know what? I know a lot of people teach, hey, you know what? FX is 24 hours. You can trade at your convenience, you know, come home from work and, you know, just turn on your platform and make a few trades. But I don't believe that. I think you have to approach it like you're in training or you're in a battle and you don't show up at different times. I had I think he cracked 6 raw eggs and chugged them. So yeah, I didn't do that this morning. I really don't drink those, but you know, it takes discipline and you know what, do not fall FX trade or your Euro's up, man. So you have to work hard at this. Yeah. You know what, it reminds me when people on Twitter go, hope you caught it if they made a good call. What they're really saying is, I know you missed it and look how smart I am. When people say, oh, I hope you caught it. So anyway, you see the worst come out in people in, when it comes to this business. So anyway, you have to be disciplined, get yourself on a regular schedule. You know, if you want to trade an Asian session, yes, I'm a mean man. Yeah. So, you know, have a regular schedule for the markets. I think you still have to put in at least, you know, especially at the beginning, if you have to work 8 hours for any other job, why wouldn't you have to do that? Doesn't mean you're trading, but it could mean you're doing research, could mean, you know, you're screening all the different markets. It takes time and it's hard work and you're going to have to live through adversity. And if all of those things scare you, find a great money manager and let him detach from your money and let them trade for you. Because if you want to be discretionary and self-directed, you're going to have to put in the time. Yeah. So
that is one of the reasons that people fail so much, because some of them, you know, buy the story that, you know, you can make tons and tons of money just by, you know, sending a few orders within the day while you are doing your hobbies.
Yeah.
And of course, you know, that's a huge lie. So whoever really believes that, yeah, you know, they should look
they're
into
in trouble.
Doing
you know, it's not
else,
like
yeah.
Steve, you can walk into a casino and play blackjack anytime. You know, so, you know, in the old days, we used to have a market open and a market closing. And so, you know, you should be there for the open and pick a session. If it's US, European, and or Asian, be there for the open and stay there till the close and get a feel for that session that you're going to trade. And that's not just turning on your platform for an hour when you get home from playing golf. So
yeah,
Okay. Mark
That's
Williams
exactly right.
says top picking is a poor strategy. Okay. Could be. I like looking at turning points. I think, and it's not just me. If you respect someone like Paul Tudor Jones, although he says only losers add to losers, he also said that the big money is made at the turns. So turns are usually a market topping out or a market bottoming out. So many ways, many philosophies on how to trade. Don't concentrate on what's a poor strategy. Concentrate on what's the right strategy for you. And that's the end of my coaching session. How you doing today, Blake? What are you thinking here, buddy?
Hey, good morning, Coach. How's it going?
Pretty good, bro. So we're like Rocky, we get
the accent.
Huh?
Is it the
we
accent?
Get up.
Is that it?
No, the time of day we get up.
Oh yeah, yes, definitely. No, I was joking about that. I knew exactly what you're talking about. But yeah, today is or every day is just getting up so early. It's just doing it. I'm just looking at the S&P. Actually, we had such a poor close yesterday.
Yeah.
Let's look at that. Let's look at yesterday's candle. Okay, there we go. Yesterday's candle, false breakout. See that false breakout, bit of a shooting star. Today we got a green candle. So the question is, what do you do with that? Well, my opinion is it's still early in the day. So by the end of the day, we might not look like that anymore. So do I think this market's probably a fade at the open? I think it is, but that's as long as we stay below this 3,000 and that yesterday's highs, yesterday's reversal candle, you have to respect it, right? But it's hard because you get up in the morning, like I'm like up right now. It's like, wow, there was zero follow through. We're up, and I don't even know why we're higher. And we were joking about it in the in the chat room, and you're going to hear this cure, this vaccine, this, that. Every company is trying to race to put together some sort of vaccine, right?
Yeah.
It's going to eventually happen, but there's going to be constant, but the market's going to become numb to it too. The market's going to go, okay, I've fallen for the Moderna news one too many times in the last couple of weeks. You know what I mean? So the market should be aware at this point in time that there is going to be some sort of, there's people that are making progress on a COVID-19, vaccine, therapeutic, blah, 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 blah. So you're going to start to see the market become numb to it, because right now the market just gets giddy on anything that suggests that we're closer to, a normal life, if you will. So with that being said, you just got to be careful chasing the market higher on news like that. Yesterday was a great example. The market settled in and said, oh, this Moderna news, there was a trial on 8 people. Oh, and then the market started to come under pressure. So just remember that you just be careful getting too caught up in the news at this, of these headlines that are coming out. Now, as far as equities go, like I said, we are, on the S&P, we're probably near, I would probably think some intraday highs up here as long as we can hold these levels. So if you go to, let's draw this out. So we're at the 618, maybe the 2970 level should probably end up capping, the rallies near term.
Hey, Blake, the Pentagon said that, the military should be prepared to work in a COVID environment through the summer of 2021. So, that's life. That too is life or death for our military, and that's what they say. They don't think there's going to be a vaccine. They have pretty good intelligence, don't you think, in the Defense Department?
I think they do.
Yeah.
Yeah, they do.
That's what they're saying.
Interesting. Yeah. All right. Well, thanks for that, Dale.
All right,
so,
man.
looking at like the euro, I've been really bullish this week on the euro, playing it to the long side, playing it against crosses too. I'm trying to buy the euro sterling on dips, but the euro dollar is struggling now at the 78% retracement. I think we've been in a long-term, 108 to 110 range. Now that we're closer to the 110 level, I am a little bit more careful about being on the long side of the euro up here. You have to be. There was earlier this morning, which you guys should take note of this because it was on Reuters and it wasn't on Bloomberg. German government spokesperson says on German-French proposal on coronavirus fund is not about joint borrowing or euro bonds. So that's some pushback that you're getting from the EU. I do still think that they're laying the groundwork for more of a cohesive euro group, personally, but I think it is worth noting that is that Germany's coming out and specifically trying to talk down any near-term optimism. The cable, the cable broke. First of all, the cable. This is the neckline of this head and shoulder pattern. It's really difficult because it's hard to know how exactly you want to draw this. But what I am going to point out is that we are above the previous channel that we were trading, trading with, if you will. And because of that, I think that the cable is at risk of a continued squeeze higher. As long as the euro stays, above 109, I think the cable can probably, firm up a little bit too. But we're seeing that against the commodity currencies. Like here's the Aussie. The Aussie looked like it was going to fail yesterday or last night, and here we are up against the trend highs again. Nearing the 66-cent level. I'm actually quite surprised that the Aussie is as strong as it is this morning. The Kiwi also pretty strong. The Kiwis bounce back aggressively, and Kiwi's up there. I mean, it looks. It's like every time you think that these commodity currencies are going to show a little bit of weakness, they just firm up again. Like I said, the dollar Canadian is near. Or no, I was going to point out the dollar Canadian's near what I think is triangle lows. We actually were bouncing pretty aggressively yesterday afternoon, and now we're back down, in the 80s. Now we do have CPI coming out here in 10 minutes, 10, 13 minutes. So we got to be careful the data that's coming out. But the crude oil market not going to zero on the contract that just expired a couple of days ago is one of the things that's obviously kept the Canadian firmer. I think a lot of people were expecting, the front month crude contract was going to go negative again, but that was really an anomaly. So now we're just, we're seeing the Canadians been pretty strong in the last few days as a result of that, of crude being, kind of squeezing out some of the shorts. All right. So, just keeping an eye on the dollar Canadian while we're below this triangle support. And this is my chart of the day yesterday. If we get back above 139.50, that would be, in my opinion, bullish. But there's a lot of work to get above there. I mean, it's just since Europe's been around. I mean, the Canadian got slammed down basically 60 pips. So, we got a lot of work to turn this pair bullish again. The US dollar Mexican peso is at trend lows. So, this, I actually tried to play this one on the long side last night. Wow, look at the S&P futures at new highs. I tried to play this on the long side last night, and I put my stop relatively close, and I, woke up getting stopped out. And we're hitting new trend lows, which I'm actually surprised about. Because of, again, these are the daily candles that I've been looking at these wicks here. Like we're not getting a close below this 23.70 roughly. Now, like I said, it is early. The US dollar Mexican peso could be significantly stronger here by the end of the session. By the end of the session, we could be trading up at 24 again, and it would be a hell of a rally. But I mean, it is possible, especially with this pair So the reason why I point that out is because even though it's red right now, it doesn't mean by the end of the day we're going to be, it's going to look like that. So that's, just something to obviously think about. And I guess the last thing I want to really discuss really quick was the yen. The dollar yen, we stalled here at the 38% retracement, and this is also the 200-day moving average. So, and you can see this is if you were on the daily roundup yesterday, you saw this. So we had a divergent relative strength 4-hour as we're coming up to the 38% retracement. Price was increasing, relative strength wasn't, which suggested that we'd fail up here, and we have. And I guess the question is, from here, what do you do with this, especially with equities, as strong as they are? I would think that being a buyer of the US dollar Japanese yen is the right trade. But again, the correlations are not, not as strong as they used to be. So it's hard to say. I think you just have to be really careful with the US dollar Japanese yen while we're below 108.20. Remember tonight, today is Wednesday, right? So it'd be Thursday morning, the Bank of Japan's having the surprise meeting. The market has some high expectations of some policy action from the BOJ. If they don't deliver, we could get a hard rejection from here. But, then again, the BOJ could do something very creative, and then we get a breakout above 108.20, and then, then it's, sky's the limit. We're going to be trading up around, 110 following that. So I think you got to be very careful with the yen pairs going into, the next, call it 12, 24 hours or so, 12, 18 hours or so. What's that?
Good heads up.
Well, again, I don't know what to. I think the market has expectations, and that because it's already got built-in expectations, we got to be a little bit careful. So anyway, with that being said, I want to bring in Steve and Stelios, and obviously Coach. How are you guys doing today?
Good morning, everybody.
Good morning, Steve.
Good morning, guys. Good morning, everybody.
Morning, very good, doing very well.
How things look across the pond?
Yeah, I mean, we got this continued rally in risk, and here we are in the S&P, up near our trend highs. How do you guys feel here about the markets here?
I'm going to repeat what I've been saying the last few days. I think we're seeing a short squeeze, and indicative of this is, remember 2 days ago when Moderna announced that they run some really successful tests, blah, 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 and the market just shot higher. And then yesterday we had kind of a rebuttal of that. It's actually interesting that Moderna, they released that data 1 day before they did the capital raise, which is interesting. But
that is interesting.
Interesting.
Yeah. Very
quotes,
interesting.
Well, a coinkydink.
Yeah. So, and now they've kind of retraced a few of those words that they said, and the markets don't care; they still go up. So I think yesterday probably a lot of people got short on these news that, hey, these tests results maybe are not as great as they sounded initially, and we did the close down yesterday. But now in Asian trading and European trading, we're up, and we're up 1% plus. So it just feels a lot like short squeezing to me.
It's
and I think
the usual, Celio. Potential good news are worth 5 times to the upside what denying the rumor is worth to the downside.
This is true.
Yes, that's true. And
does it remind you of something, by the way, guys? Isn't this the vaccine story a copy of the US-Chinese phase 1 trade deal?
Yeah, it's good metaphor.
I mean, it's the same thing. You get some rumors, oh, we're going to be working on a vaccine. Oh, they have something that's under development that looks promising. Oh, there is another company that, is sending some good data. Market is rallying every single time. Then we get denial. but the market, just barely pullbacks and, rinse and repeat. I think they will make this last as long as they can.
Until
At
there's
least
a
they will attempt.
vaccine. Yeah. Probably,
Yeah.
Yeah, this is true. All right, guys. Well, hey, I'm going to pass it over to you. I got to get over to the markets, but I wanted to wish everybody a great day. I'll see those of you that are ForexAnalytix family. I'll see you on the daily roundup webinar in about 4 hours. So thanks, everybody.
Okay,
Thank
bro.
you, Blake.
See you later.
Yeah,
Bye-bye.
guys, in FACE, that's a great reason also to join, is because after FACE, besides members chat, when Blake comes on in 4 hours, so we've had 4 hours more of action. Early in the day, we're talking about it's early in the day, but 4 hours later, there might have been some development technically in the market that you could go in and ask Blake questions about, what he thinks about today's action. So just another edge that you get being a subscriber.
Yep. Absolutely.
Go ahead, guys. Sorry. Yeah.
Yeah.
That's relatively new,
One
Blake's
of the many
only...
benefits,
Yeah.
as you mentioned, Coach.
Yeah.
Yep. So that's what I think about equities. I think we're still short squeezing. I've said this for a few days now. I think 3,000, 3,050, probably the level where I'm going to start looking at a reversal for the S&Ps. But as we know, we do tend to overshoot, especially when the market's one way. So I wouldn't be surprised if it goes a little bit higher. But within the next few weeks, I expect days or weeks, I expect a leg lower. So a proper leg lower. So I'm still waiting for that. I'm not long and I'm not short yet. I'm just waiting quite a bit below with my bids and see what happens. So, well, equities are still calling the shots and driving a lot of the currencies
Absolutely.
as well. The interesting thing is that precious metals are still strong, even though equities are rallying. And usually what happens when equities have good days, precious metals tend to, in the very short term, tend to have bad days. But I guess the markets are looking more long term. We do have to be aware about sentiment. DSI on gold is over 90, I think, or somewhere around there. So we have to be careful. I think we're probably close to a little bit of a pullback.
Although the DSI works a little bit like the RSI as well, meaning very high readings confirm that there is a clear trend. Of course, extreme readings eventually lead to a reversal and weak hands get shaken off the market. So, there is no doubt about it. That's going to happen to the gold market as well at some point. I mean, people that joined the rally so late at some point are going to be shaken off before the market can resume on its course, which, allow me to insist that, that's higher. But I think that the readings also confirms, tell you that, the trend is definitely higher. And to be honest, fundamentally speaking, there isn't a single argument you can make against metals at the moment.
Well, only if they mine an asteroid or something and the supply increases.
Yeah, okay. excluding things that have such a low probability that taking them into account is probably not the best idea.
I agree with you. But anyway, that's what I want to say about metals. Just an interesting point. So what else is happening? We had some data prints. Actually, we have one in 1 minute. We have Canada CPI.
I'm going to bring this here.
Yes, we did have CPI out of the UK and out of Eurozone. UK came in at 0.8% year on year. That's quite a bit lower than the usual, 1.5%, 2% that we used to have over the last months. And Eurozone is down to 0.3%. So both very, very well below.
I've started getting seriously worried. Imagine if my money starts losing less of its value every year. I mean, I don't know how I can handle other stuff that life throws at me, but I'm not sure about that, Stelio.
Imagine if goods and services start dropping in value a little bit. That would be terrible.
No. Yeah. I mean,
yes. So
hope I never live to see the day.
Well, we've been conditioned to accept that 2% inflation every year is good for us. So that's what the rule is. Okay, let's see. 3 seconds to go for Canadian.
I've pulled USD CAD here, obviously.
everything's been underperforming, so I wouldn't.
Wholesale trade is the only one that has come so far,
Yep.
minus 2.2 versus minus 3.8. So that's a little bit better, and they haven't yet released the rest of the data. Minus 0.2, there it is. Yep.
Yes, year on year. Okay, so slightly
okay,
worse.
So that came out as well. Let's see, they're okay, minus 0.7 the month on month.
Yeah. Okay, so a tick 0.1 lower than expected. Okay, it's not a disaster either way. Same
No,
like,
it's
same
roughly
like the UK. Yeah, in Europe.
it's roughly what expected. That's why we don't even see the USD CAD market really doing anything, as you see here.
Yes. Yep,
okay, Stelio, go on, and I'm gonna take it from the USD CAD once you finish, since a lot of people are looking at it.
Sure. I mean, not much else to say. I want to just briefly touch on crude. We had the expiry yesterday, none of the shenanigans of the previous month, and I think that was visible from days ago.
Days ago.
Yes, and also remember the OPEC Plus member states have been quite supportive, and they've been positive in terms of, oh yes, we're going to do everything we can to stabilize the market, and it's in their interest, and so I think that's going to continue. And basically, the trouble of last month was avoided, and see how that goes. The futures market is still upward sloping, so we're expecting higher prices, but obviously not as steep as it was last month because of the way the front month contract was trading. Apart from that, currency-wise, I mean, we said it before, they're all going in line with the dollar and with equities, so not much to say. Commodity currencies are doing pretty well today.
Yeah, they are. In general, they've been doing decently lately.
Well, they got crushed over, in March and late March, basically. So they have a lot of ground to recover. But yeah, they're continuing, and as long as oil is doing well, WTI is 2% higher, risk is higher, so you would expect them to be.
Everything is fixed. Everything is great in the world.
Everything is fixed by everything. Yes.
Yes.
Apart from that, not much else. One interesting thing I read about the Chinese, and apparently, okay, again, I'm not a specialist, but I read about this on Bloomberg, so I'm guessing they have researched it properly. The coronavirus actually is mutating and manifesting itself differently in some new cases there. So,
that's bullish for sure. I don't know why, but they'll find a reason to make that bullish.
Yeah, we've said for a while that historically the second wave is always much worse, and I think this is because it often tends to mutate and be different than the first wave. So if that's true, then we get through the summer, then September, October comes, and I hope I'm wrong, but I think it's probably going to be a little bit.
Yeah, I hope you're wrong as well, but we've seen that happen before. In 2018. Most of the victims of the Spanish flu was when it came back.
Yes,
actually.
The good thing this time around is that people are much better prepared. There's
absolutely
access to information.
Yeah, exactly, and medicine has progressed immensely, yes. And so things definitely are better than then.
So it's easier, relatively speaking, to tackle something like this, but still that doesn't take away from the severity, the potential severity of something like that. So
of course
there's something to be aware of.
Ariel's saying there's 30 strains already of this virus.
Wow. I've told you at the very, very beginning, coronaviruses, there are a lot of them. Actually, my son was hospitalized exactly a year before all this happened with coronavirus. He had like 40.5 fever for like 3-4 consecutive days. So we ended up spending a week in the hospital. But of course, it was one of the older strains of coronavirus, the back then existing. So yeah.
So you're responsible for the Greek infection.
Yeah, 1 year later, we kept it in the refrigerator for a year, and then
Yeah. Okay, that's all I have. So we can go to the charts. Maybe I don't have much else to say. Just waiting really for. Actually, one last thing. Bailey, the governor of the Bank of England, is due to speak in just under an hour. So remember, the Bank of England, they have been Haldane and a couple of other members. I think they've been talking about examining negative rates. We're probably going to get something from Bailey today, and definitely worth listening to. And my guess is that sterling might see a little bit of weakness on this speech.
And speaking of that, Stelio, just look at this perfect technical juncture for sterling to see weakness.
Yeah.
Broke through this head and shoulders formation.
There's a song about that.
Retested the confluence of the broken neckline and the 200 daily moving average, and that's exactly where we've stalled. So if indeed we get dovish comments, which of course, stupid of me even mentioning it. I mean, when was the last time that the central banker opened his or her mouth and anything else then dovish comments came out? I can't even remember. Probably, my memory is not that good as Dale's, but perhaps Dale can remember.
I remember the song about Bailey. Won't you cut rates, Bill Bailey? Won't you cut rates?
Yes,
we'll
and not forgetting, actually, also one last thing, not forgetting we have the FOMC minutes later today, so that's going to be interesting as well.
Yeah, it's going to reveal the fight they had. How soon should they hike? How much should they tighten? You know how it is.
How negative or more negative rates? Yes.
Yeah, like negative or more negative. $1 trillion of QE per month or $1.2 trillion.
Yeah.
They disagree in important stuff like that.
You're a great source, Del, for fundamental analysis every morning. I don't take the time to go over the news, and I count on you to, bring me up to date with what's happening fundamentally. You do a great job doing it, man.
It's my pleasure, Dale. Thank you for saying that. My pleasure. Steve never says that, so thank you, Dale.
Yeah.
You know that. You know that I agree 100%.
Yeah.
So USD CAD, since we had Canadian data, tested yesterday the bottom of this triangle and
Wile E. Coyote.
Yeah, found support once again. So we rallied quite a lot from the lows to close the day, like something like 60, 70 pips. Again, showing weakness today, but keep in mind that as long as we trade above this 138.50, I mean, it makes no sense to try to be on the short side. Having said that, there is a likely scenario that we might see another leg lower. I mean, one move lower, perhaps.
That measures to 130, that formation.
Yeah, I doubt we're going to go that low. I mean,
but I'm just saying it's 800 pips, that formation.
I think that either 136.60, this previous high there, if we break through the support, right?
Yeah.
Or this previous resistance area at 135.50 will be the place that we're going to see USD CAD moving higher if it manages to break through 138.50, because there is still a very decent chance that it's going to find support there and eventually break through this triangle and continue higher. In any case, I would be looking for higher prices. The question is it going to be from here or is it going to be from a little bit lower? That's the only thing I contemplate in my mind. Now, we didn't have a look at it like I think yesterday. USD NOK still moving in the right direction, if you ask me. Still looking for a move towards 950, 947. You can see there. USD SEK bleeding lower as well. Perhaps this was also a blow off top here in USD SEK. I would be a lot more bullish the SEK and the NOK than the Canadian dollar. That's why I would be more likely to see higher prices in USD CAD than in USD SEK and USD NOK. So we might end up seeing USD CAD retesting the highs while USD NOK and USD SEK, of course, producing a rebound, because it's not that they're going to be moving in opposite directions, but finding a new high a lot lower than the previous blow off top. So that's basically my thesis, that it's very likely to see higher prices in USD CAD, but see a big divergence in USD NOK, for example. You know, I'm a big believer in the NOK. That's why I'm still holding, you know, an initial core position both in USD NOK and Euro NOK short. Now, we mentioned yesterday and the day before yesterday that there was a high probability scenario that along with stocks, we would see, you know, the usual suspects, meaning the currency pairs that are highly correlated with stocks, push higher once again. We're seeing, we saw yesterday the Aussie make such an attempt, but it didn't manage to close the day above this triangle. We're seeing another attempt today, and it's very likely that it's going to succeed, in which case I would be looking for a move towards 67 cents. Here is the Kiwi, you know, diverged more to the downside, so it was looking a lot weaker, but it has been doing some catch up during the past 3 days. It is likely that we're going to see another move higher for it. 62.60 is the 61.8, a little bit higher at 63.20. We find the 200 daily moving average. So obviously there's a good probability that, you know, we're going to see something like that happening there as well, since the previous move lower failed. So something like this. Needless to say, the Aussie yen already made the move. And here's the Kiwi yen that is making the move now. One leg higher, triangle in the consolidation, likely one more leg higher before lower. So that's more or less what I see there. Alexi, I've been joining these meetings as often as I can during lockdown in South Africa, and want to say thank you for your explanations. I'm enjoying it and learning as I have always want together to learn how to trade. Thank you to all. Thank you, Alexi, for your kind words. Hope everything is okay there for you in South Africa. From what I see, you're obviously of Greek origins. What was I saying? Yeah, Aussie, Kiwi, and Aussie yen, Kiwi yen, you know, pointing in the same direction. Blake already said, and I mentioned it yesterday, that, you know, likely USD yen is a buy. Personally, I'm staying away from it for the same reason I stayed away back then. And thankfully, because after it whipsawed traders 3 times, false break higher, false break lower, false break higher, it's once again within this multi-year triangle. And thank you, I'm not going to have any of that. You know, I'd let others try to trade this. I'd rather trade things that, you know, make a lot more sense. You know, one way for you to see that there is really a complete absence of trend, and not necessarily following the exact same moving average as I am, just following a slow and a fast moving and a faster anyhow moving average, because you
need some pressure in gold here, Steve.
Yeah, I'm going to visit that. So look at, for example, the 200 and the 50 daily moving averages. They're both more or less horizontal. That shows a complete absence of trend, especially the 200. If you look at it, it's like completely flat, 0 degrees. And they're on top of each other, right? I mean, just by looking at these 2 moving averages, or any pair of moving averages, one slow and one fast, if you see them being on top of each other and being horizontal, you know, it's the mathematical proof that there is absolutely no trend. Not that you need the averages. I mean, you can use your eyes, but, you know, if you're more oriented or focused on using indicators, you know, that's one of the easiest ways to do it. So, you know, the moving averages here, as the RSI, etc., are telling you, you know, there is a complete absence of trend. So, you know, find something else to trade. Now let's have a look at the metals, since Dale mentioned it, and anyhow I know that people are tracking them very closely. So yeah, I mean, Dale, you know what my problem is here. You know, I'm a swing trader.
Yeah.
If we have a look at the 4-hour chart, I'm pretty sure that you're absolutely right, that gold is under pressure. But, you know, for me, this doesn't even register, you know what I mean?
Okay. This looks like it might be a failing rally.
Might be.
You know, maybe ABC, Steve, back
exactly.
to the breakout. Yeah.
Yeah, something like this. Something like this.
Yeah. So
Very
you'd be
likely.
a buyer. You just sit and wait to be a buyer because the trend's up down there. I know there'll be a lot of people buying a Tesla breakout. They're waiting.
Very likely, yes, very likely. And from a risk reward perspective, if you're a short-term trader, I totally agree with you, Dale. The combination of the last 3-4 hour candlesticks, for example, are especially the last one, which is an outside black candle so far.
Yeah.
It is a bearish combination. There's no question about it. And there is an excellent risk reward ratio if you want to be short against, let's say, 1755, because you can risk like $10.
$10, yeah.
And look to make, even if you want to be conservative and look
40,
for a retest,
50, 30.
For a retest of these levels there, you can, yeah, I mean, yeah,
2 to 1.
Yeah, you can look to make at least 17 to begin with, very conservatively speaking. So almost a 2 to 1 risk reward ratio, and very likely that you're going to get a retest of this triangle, which means probably doubling that. And you know how it is. Sometimes when you try to catch like reversals with very good risk reward ratio, I mean, statistically speaking, sometimes you're going to get very lucky, and what might look initially like a simple pullback might prove to be something deeper than that. So if you scale out of your position and keep some of it running, you might initially try to catch, a $20 move in gold and find yourself having, 1/3 of your initial position riding $100 to the downside.
Yeah, in case it negates the breakout.
Yeah,
that would
absolutely.
change to, that would make the wave up that we had terminal thrusts for a 5 out of a wave 4 triangle.
Yeah, which is potential. I mean, this was a triangle. We did register a higher high. So, theoretically speaking, we've already fulfilled the minimum requirement, for breaking out of it. So yeah, not my type of trading. I don't want to be babysitting stuff and being glued on the screen trying to determine what's going to happen within the next 10 minutes. I'm not fit for that. I know that as a fact. I'm not trading properly if I have to trade in such short-term time frames.
Attached,
yeah. I'd rather, I mean, my skill is to be more detached from what I'm trading and have a plan in advance and, not have to worry in the 10 to 10 minute change. So
you don't need to use the cursor technique where you put the cursor on the candle and drag it in the direction of your position. You've never tried that.
Not that I remember.
Yeah,
all right. So here is also silver. Silver, quite a brutal move to the upside, no question about it. Still more upside left, if you're asking me. I mean, we are finding resistance once again in this resistance area at 1760 roughly. If we do break through it, I can see us moving to 1860 very easily. Now, of course, would be more healthy if that happened in like such a manner like this one, right? I mean, a lot healthier and much easier to participate if you're not already on it. Much easier to participate if it gives you the ability to, to enter at more desirable levels having to do with potential risk reward. More metals that's worth noticing, and I've talked about how undervalued platinum has been, multiple times during the past several months. Platinum, bridged through the 800 level, which was resistance, and is like, attacking this 875. Keep in mind, 875 is, a very, very important horizontal support resistance area. So, be careful there. I mean, if you bought the breakout from this triangle, that's great. But now you should start, being a lot more careful because, this area 875 is a key resistance area, and buying just on key resistance is, is a very bad proposition. That doesn't mean that it can't, slice through it and appreciate even further, but it means that risk reward is stupid. It makes no sense at the moment. Palladium, since it broke through this descending channel, I said that, I find it very likely that it's going to retest 2,250. It's not there yet, but if we get a few more days of risk on, that's definitely going to help, and it might get there. Copper, also appreciating, but keep in mind that, just by having a brief look at copper, this is not the type of rebound that shows real strength. I mean, I find it corrective in any way you look at it. And as long as we trade below 248, I do think that the path of least resistance is lower and the risk reward favors short positions. But we might even, we might end up attacking 248. I mean, if we get a few more days of risk on, we might grind towards 248, and we will probably turn lower from there, at least initially. I mean, even if we are to move higher, I would expect that 248, even temporarily, should do the trick and turn us lower. Now, having to do with crude, I told you that 25 is resistance, this 25 area. But I also told you that if we slice through it, 29 should be easy to get to. And I still don't see any evidence that we're turning lower. So, I wouldn't be surprised if even within the week, we end up seeing $29 trade in crude oil. Anyhow, enough talking on my own. Let me go through some of your questions and see what you want to look at. EURUSD, any thoughts how it will react to the coming 1.6 trillion hole in the Fed's funds sheet that gets filled in 2 weeks? Rate spike, asks Scott. Listen, Scott, we already have a huge divergence between what rates have been doing between the Eurozone and the US. And the Euro has failed to do some catching up with it, because, I mean, the rate differential, I was examining that actually, I think it was like 2 days ago, would imply Euro USD being somewhere in the vicinity of 125. And so far it's been ignoring that. I think that that gap will eventually get filled. And I think it's extremely likely that the move to close that difference is going to happen from the side of the Euro USD. I've been saying, for those of you that are frequent listeners, I've been saying since probably years ago that, Euro USD remains, under pressure, but the move lower is a slow, grinding, overlapping move. And I even doubt, I've said that many times, I even doubt that the pair will have the ability to bridge through parity. I know that a lot of people consider that a given. Personally, I think it's not a high chance. I think that the Euro USD is going to turn higher and it's going to rip some heads off. As long as we don't have something like destructive happening from the side of the Eurozone, meaning, one of the big countries like exiting. So, as long as that scenario is not going to happen, I think that the Euro USD at some point within the next few months, it's not easy to time, but it's going to be easy to recognize when it starts happening. Because when it starts happening, the average true range of the pair is going to explode higher, and the squeeze is going to be such that every single day we're going to be breaching through, some important resistance levels, and people initially are going to be fighting this move, claiming that it is an unwarranted move, and the market should soon return back to what is normal, and get lower Euro USD prices. And I think that type of mentality is going to pour a lot of gasoline on the potential rebound.
Yeah, because the bullishness in the dollar is so entrenched after such a long period of time.
Not only that, Dale, it's a combination. a lot of people very bullish the dollar, and a lot of people explicitly very bearish the euro.
Exactly. And
So it's a
they
killer
haven't been
combination.
wrong. And they haven't been wrong until.
Let me tell you something, and they've said that before. Have they really been right? I mean,
Well,
having to do with the euro USD. Let's examine this.
go back to the weekly. All right.
If you sorted it in the summer of 2018, right, which means that you've been holding to your position for 2 whole years, and assume that you're short, you've made less than 3%. Would you be feeling vindicated?
From 120 from those highs? You're talking,
I mean, I took as an example this low, right? August 2018 to the current level that we have at the moment.
Oh, okay.
Yeah. I mean, if you sorted after that sharp move lower, thinking that, this is the beginning of another big leg lower, you've been holding your money, doing, in essence, nothing, because after 2 years, you will have made less than 3%, add to that a little bit from, rollovers. So let's assume you'll have made 4%. Would you feel vindicated if you were holding to a position for 2 years and you had made 4% on it?
Oh, you could do that every day.
Yeah. You know what I mean?
Yeah.
So I don't think there are a lot of people that are feeling really vindicated for being short the Euro USD. I mean, at least from the perspective of opportunity cost, they would have done better in almost anything else.
Yeah.
Being on the right side of the market, of course, right? So if you were for 2 years in the right side of the market, for any of those, for any of the other pairs, you would have made a lot more money than you would have made in euro. So in any case, keep in mind, since we spoke about the euro, 110 remains resistance. Above 110, we can easily squeeze to 111.50. I mean, the 110 is now also confluencing with the 200 daily moving average. Another indication, by the way, that there is no real trend here. I mean, you remember what I said about the USD yen before. As you see, the 50 and the 200 daily moving averages here in the euro are very close to each other. They are not horizontal completely, because we know that the euro has been in a very, very slow depreciation. So they are slightly downwards inclining, but they're also telling the same story, that there is an ongoing euro weakness, but it's like dripping. I mean, barely dripping. And at some point, I've seen that from my experience multiple times. At some point, people that have been holding short for so long, and they're seeing their profits like dripping in, being almost non-existent, at some point they might find themselves out of the money and lose the profits they had in a year in 3 days. I mean it. As people that were long the S&P found themselves being in the money for months.
Years.
For months, years. And then in 2 weeks, in 2 weeks, they lost all the profits they had made in holding on for so long. So the same thing can happen in reverse for the euro. So I still insist that the risk-reward ratio, I mean, the trend is lower until proven otherwise, but the risk-reward ratio is definitely to be long this pair. I'm not long yet, and I have no reason to be. I mean, if I don't at least see 110 break, there is absolutely no reason why you should trade within a range, unless you want to trade the range. I mean, you want to short 110, hoping for another revisit of 1075, 1078. Yeah, absolutely. I mean, be my guest. It makes sense.
Never sell a sleeping market, and euro's been asleep for a long time.
So to go back to Scott's comment, that might be the straw, what you mentioned, Scott, that will break the camel's back. Yeah, might be the case. Absolutely might be the case.
Tell the attendees what he said. Oh, they
I
can
read
read
it
his
before.
question.
He said,
Oh,
he said, any thoughts how it will react to the coming 1.6 trillion
yeah.
hole in the
Mondo.
Fed's funds balance sheet that gets filled in 2 weeks? Speaking of that, do we have a guest, by the way, Dale?
Jeff Cooper, are you here? Because I don't see you. If you're under a different name, please send something on chat. So not yet.
Okay, let me know. Okay, just let me know.
I will.
So
I'll
here
play
is
an
the
E chord.
okay. So here's the
All right.
10-year treasury. You can see that we keep on coiling and coiling and coiling, but look at the divergence in the Bund. The Bund once again has broken lower from what looks like a quite bearish formation.
Yeah.
So you know, the 10-year treasury is holding up quite nicely, while the Bund is breaking lower, meaning once again we have rates diverging. That means that Germany's rates are moving higher, while 10-year yields in the US, you can see it here, more or less have stayed flat, very, very near the all-time lows. I mean, we're very close to the all-time lows. So yeah, I mean, we keep seeing this divergence, but it hasn't been playing out yet. And if you want to see it depicted, keep in mind, for those of you that don't know, I guess not many, yields are inversely correlated to the bonds, right? So,
Yeah.
you know, if you invert this, you get the yield. So let's overlay to the ZN. So, okay, let's make it look more like a yield. Okay. So as you see, this way you get more or less what the yield is, right? And the reason I did it like this is because we have the Bund and they want to overlay the Bund here.
So that's
No,
another, the interest
I
rate
actually want
differential
to
is moving
overlay
in
the
favor.
one. Okay,
Yeah.
so look at this, Dale.
Yeah, yeah. What a difference. So no,
There it
the
is.
interest rate advantage is melting away.
Yeah. Yeah, so you see this gap here, right?
Yeah, yeah.
So,
And the first time we've seen that, all the way back.
yeah, I mean, we had the opposite
Yeah,
happening here, and now, you know.
they lead both ways.
Yeah, yeah, and as you see in this case, we got that gap in essence closed, right?
Yeah.
And I assume we're going to see the same thing happening here.
Nice look. I love the intermarket stuff.
Yeah, I mean, you know, it's always interesting.
And
Here's
don't
the
fade Stelios. He's short the Bunds in some fashion. Fade him at your own peril on macro stuff.
Yeah, Stelios is trading long term,
Yeah.
but he's so rarely wrong. You know what I mean?
Yeah.
And
he can be early, but he's usually right.
Oh, he's usually early,
Yeah.
but that's the only way to trade based on fundamentals, Dale.
Yeah.
I mean, trading based mostly on fundamentals and timing, bottoms and tops, it's a fantasy. You know what I mean? It's a fairy tale. Yeah. I mean, if anybody tells you that they're doing that consistently based on fundamentals, they're definitely lying to you. I can guarantee you that. Okay, so here's the DXY as well. As you see, still stuck in this triangle. I mean, this is a painful trade to watch. You know, still likely if we get several more days of risk on, we might see another leg lower before higher, or we might straight go higher if we, you know, if we do get very soon like risk off, because definitely risk off is going to bring dollar strength with it. You can take that to the bank. At least for the time being, the relationship remains such. Just a long-term prediction. Even if you follow the general theory of the dollar smile theory, which is a more generalized theory, you can Google it and find it. I do believe that the relationship between dollar and risk is going to be changing within the next few years. So I very much doubt it. that we are going to get, this relationship staying for much longer with us. Of course, it's not time to look for this correlation to change yet, right? I'm just, giving you a heads up in what I believe is going to happen. DAX, question about the DAX. So here's the DAX. Likely one more high, right? 61.8 is at 11,547, perhaps even a little bit higher. But I do think that we're going to get a much deeper correction following that. And there was another friend mentioning the FTSE. I think same deal with the FTSE. Little correction lower, perhaps another leg to the upside. But I would expect a deeper correction following that. So as you see, more or less all the indices, are very similarly looking. Let me see if I have any unanswered questions. Any news from your guest,
No.
Dale?
No, and
He's lost.
he's very good on, he's a GAN guy. So, yeah, I talked to him on the phone yesterday, too. So
perhaps some misunderstanding with the time then.
Yeah, he's out here on the coast, so he knew it was early. Yeah, you got to be Rocky Balboa and get up at 4 in the morning, I told him.
Dimitri, I can look that up for you, but I have no, I don't have an idea. He's asking how to trade platinum. I trade it via CFD, and I also have, I also have a second alternative. There's a fund I work with, and I send them ideas. I used to work for them, until I didn't have the time anymore. And, we have very good relations. So whenever I need something, going directly like through a bank, they do that for me. And then, we consolidate, whatever,
I believe there's a futures contract.
It is very likely. Yeah, it is very, very likely. But I haven't
probably
had,
pretty thin.
Yeah, I haven't had to use it because I have access to CFDs on platinum, so it's a very easy way for me to trade it. Natural gas expected now till expiry to go up or down. I can tell you what I've said multiple times, that natural gas, here it is, has been diverging for a long period of time, producing this sequence of higher lows, accompanied by a sequence of higher lows in the RSI. So as long as we trade above 1.6, I think it's very dangerous trying to be on the short side. So yeah, I mean, it has a decent chance to trade higher, to attack the $2 area once again, if you ask me. But since we're in the middle, since we're in the middle of this range again, I think, risk reward is not good. I mentioned like 3-4 days ago when we were testing 1.65, I mentioned that was a good long opportunity from a risk reward perspective. So back then, there was a trade there. I mean, there was an excellent trade because you had to risk very little to potentially make a lot more to the upside. But, with it having rebounded to where it currently is, and with $2 area being resistance, the risk reward ratio now is at best 1-to-1. So not a trade I would be taking just because of an absent risk reward, an appealing at least risk reward. Okay, so that's my 50 cents on that. Okay, coach. Since we have no guests, should we wrap it up?
Yep.
Okay, perfect. So everybody have a nice day and see you tomorrow.
And don't just count your pips, count your blessings. Thanks for hanging out with us, guys, and consider becoming part of ForexAnalytix and hanging out with us all day long. You're very welcome, everyone. See you tomorrow. My guest tomorrow, I know he's very reliable.
You don't have to spam, mate. You were a little bit late. You don't have to spam. I don't like that, really. I see you. Okay, you want to know about the IBEX. It's still looking bearish, but I mean, you had the time to ask before. We can cover it tomorrow, okay? It's still bearish, trust me.
Yeah, trust Steve. And gosh, tomorrow we have Matt from DJ Thistle 01, excellent technician, real nice macro stuff. So We'll see everyone tomorrow.
Bye-bye, Coach.
Okay?
Bye-bye,
Yep.
everyone.
Take it easy, Steve. Nice
You too.
job as usual. See everyone
too.
tomorrow. Adios.